Hey, welcome. So today we are going to tackle one of the biggest questions in gold trading, maybe the biggest. How do you pick your time frame? It sounds so simple, but getting this wrong, it's like showing up to a marathon wearing sprinter spikes. You're just not set up to win. Okay, let's get right into it. I mean, it's a story we've all heard, right? Maybe you've even lived it. You've done your homework, you've studied the charts, you've got what feels like a solid strategy, but your account just isn't growing. It is so frustrating, and it's the number one reason people quit. But the answer is often way simpler than you'd think. And there it is. More often than not, this is the real reason. It's not about the strategy, it's about the race itself. They haven't matched their trading style to who they are, to their personality, to their lifestyle. They're trying to sprint a marathon, or maybe jog a 100-meter dash. It's just a recipe for burnout and, yeah, for losing money. And that really brings us to the core idea of this whole explainer. I want you to think of your time frame as the foundation of your trading house. If that foundation is cracked, it doesn't matter how beautiful the rest of the house is. It doesn't matter what amazing strategy you've built on top of it. It's just not going to be stable. So to build that solid foundation, we've got to understand what our options are. And, we can pretty much break down most trading styles into three distinct personalities. So the question is, are you a sprinter, a jogger, or a marathon runner? Let's figure it out. This table right here gives us a fantastic, quick comparison, and I want you to notice the really direct link between time commitment and pace. The hours you can actually set aside every day, that's going to directly determine if you're built for that high-intensity sprint or for the more patient, steady marathon. Let's break down exactly what each of these feels like. First up, we've got the sprinter. This is your classic day trader, right? They are glued to those fast-moving 1, 5, or 50-minute charts. The whole game is about rapid-fire trades, getting in and out for small, quick profits. But you have to be aware, this takes intense focus, and it has a really high psychological toll. All that constant decision-making, it can lead to emotional exhaustion and that classic mistake of revenge trading after you take a loss. Next up is the jogger, or what a lot of people call the swing trader. Honestly, for many, this is the sweet spot because it's all about balance. You're operating on those 1-hour or 4-hour charts, which means your trades might last a few hours, maybe a few days. You can do your analysis in the morning, set your trade with your stops in place, and then you can go live your life without staring at every single little price. And finally, the marathon runner. This is your position trader. These folks are looking at the big picture on the daily or even the weekly charts, holding positions for weeks, sometimes even months. Now, this style requires incredible patience and the discipline to just ignore all that daily market noise. The biggest challenge here isn't making fast decisions, it's having the mental toughness to stick with your long-term analysis and not get scared out of a good position by some short-term volatility. Okay, so you've met the three runners. Now we get to the most important part of this whole thing, the self-assessment. Because to succeed, you have to be brutally honest with yourself and figure out which race you are actually built to run. First, and this is the big one, what is your available time? And I don't mean wishful thinking. How many hours can you realistically sit in front of the charts each day without it messing with your job, your family, or your sleep? If the honest answer is only about an hour a day, well, trying to be a sprinter is probably just setting yourself up for failure from the start. Next up, what is your personality like when things get stressful? Are you patient? Methodical? Are you okay with waiting days for a trade to finally play out? Or do you crave that action and need to see results right away? A really high-strung person trying to be a marathon runner, they're probably just going to close out winning trades way too early because of anxiety. And finally, what's the end game here? What are your goals? Your time frame has to line up with what you're trying to achieve. Are you looking for some extra income from week to week? That sounds a lot like a jogger. Or are you playing the long game here, trying to build serious wealth over the next 5 or 10 years? That is the true mindset of a marathon runner. So here's the deal. You take your honest answers from those questions and you match them up with one of our three profiles. And once you think you have a match, and this is a big one, you have to commit to it. Don't be a sprinter one day and a marathon runner the next. Your goal is to become a master of one discipline, not a jack of all trades who's a master of absolutely none. So you think you've found your fit. That is awesome. Now, before you even think about jumping into the live market, we need to talk about how to put this theory into practice, safely. But first, here's a little pro tip that's going to be super useful once you've got the basics down. This is something called multi-time frame analysis. Basically, it's like using a telescope and a microscope at the same time. The pros will use a long-term chart to see the big picture trend, and then they'll zoom in on a shorter-term chart to really nail their entry point. It's a powerful technique to keep in your back pocket for later. But for now, let's just focus on that all-important first step. And of course, just a quick and really important reminder here. All of this is for educational purposes. Our goal is to help you think like a trader and figure out your own approach. This is not financial advice. It's not a recommendation to buy or sell gold. So please always do your own research. Okay, here it is. Your first practical next steps. Number 1, pick one time frame based on that self-assessment you just did. Number 2, open a demo account, one that uses fake money. This is absolutely non-negotiable. Now, number 3 is the step everyone skips, but it's the most valuable. Track how you feel. Are you stressed out watching every little price movement? Are you anxious holding a trade overnight? That emotional data, it's worth more than your profit and loss in the beginning, I promise. And of course, always, always protect your capital. I'll leave you with this final thought. The gold market doesn't care if you're impatient. It doesn't care if you had a bad day at work. It is completely 100% neutral. The only biases that ever exist in a trade are the ones you bring to the screen. So the real goal is to find a time frame that strips away your emotional bias and lets you trade the market, not yourself.